So there are several different ways in which you can invest your money. So number one is the bank. Most people are familiar with investing with their bank. Most people have heard their parents talk about investing with the bank. And usually when you walk into the bank and say, hey, I want to do some investing, they will steer you towards mutual funds. And there's nothing wrong with mutual funds except for that they usually come with a high fee. And we will talk about that a little bit later on in more detail. So the next way to invest is through a financial advisor. I'm not a financial advisor myself, I'm just a financial coach. A financial advisor is usually paid by a company and is a salesperson for that company. And they have some good advice about saving and investing, but usually that comes with advice to invest in high fee mutual funds. So we'll talk about that a little bit more in detail as well. Now, a financial advisor does have to take a course and they do have to pass an exam in order to sell these products. And these people usually get paid as a commission or a percentage of the products that they're selling. There are fee-only advisors out there where you're just paying them for their time and you're just paying them a set amount per hour versus commission-based. And so that might help them be a little bit less biased. So there is that option out there. Now, a third option is a Robo Advisor. Now, I'd never even heard about these before in the past until the last year or so. So what they are is a class of financial advisors that provide financial advice or investment advice online in the form of like a computer system. So it's pretty minimal human interaction, like a human has set this up obviously, but they provide digital financial advice based on a mathematical rule or algorithm. And so they're automated computer systems and you enter your information and your data and they give you recommendations about what to invest in and they charge you a little bit lower of a fee. Usually less human interaction involves lower fees and more human interaction involves higher fees. We'll talk about that a little bit more too. Now, most robo advisors focus on passive investing. And passive investing aims to build wealth gradually over time, and they try to mirror the market instead of actively trying to beat the market. And most banks and financial advisors will tell you that they're trying to actively beat the market. And we'll talk more about that in detail as well. So what is a discount brokerage? Again, this is something that I've only heard about in the last year or so. So it's an online brokerage that sells you stocks and bonds and different funds as well. And they don't always provide financial advice. They will have, some of them have robo advisors that you can pay for or pay a certain percentage for those and fees for that advice. So that is an option that you can also pursue if you're interested in that sort of thing. And because, as the name implies, they're a discount brokerage, so they're going to be cheaper than a financial advisor or the bank as well. And so examples of that would be like Questrade or Wealthsimple. So some companies to look into. Now, there's another form of investing that is called do-it-yourself investing, and that's where you buy your own stocks, your own bonds, and that sounds super scary to me. At first, when I had no idea about any investing, as it should, that's a normal reaction. But once you do some researching and you learn about investing, I think that concept becomes less and less scary. So I'm more excited to start doing this do-it-yourself investing. Now, you can do it-yourself investing through a discount brokerage if you are interested, and you can also do it through the banks. Like for example, TD Direct Investing has that option as well, that platform for you to buy and sell stocks on your own. And then the last example is just letting your money sit under a mattress or saving it somewhere in your house but not actually investing it. So some of us have had grandparents that did that because they were just fearful of the stock market or distrustful of banks or that sort of thing. The only problem with that is that you are losing money because you're not accounting for inflation with that. So yeah, you're not gaining anything, you're actually losing money. Now I'm just going to start with the very, very basics in this video and continue with that about what is a bond. So what is a bond? Or a fixed income, that's the same term. So all it is when a company or the government owes you a fancy IOU, that's about it. And so they had to borrow money from an investor and then they owe the money back with interest in the form of a bond. So the pros with that is that it's stable. There is, it's pretty low risk And the cons with that are that it has very little compound interest growth. So maybe in the 1980s, when interest rates were 18%, it would have been a wise way to invest your money. But nowadays, with 0.99% interest rates or 1 to 2% interest rates, it's maybe not the best deal. The nice thing is that it does have that stability. Next is stocks or equity. So you can buy shares of stocks, and the great thing about that is that there is higher potential for growth. And that's also a con as well. So there is a higher risk involved with that, higher potential for growth. So you can invest in bonds, you can invest in stocks. And the third thing is cash. So everybody knows about cash. So there are high interest savings accounts that you can make a little bit of money, not a great amount, because the interest rates could be like 0.1% up to 2%. Interest rates are not high right now, like we mentioned before. But the pros of that is that it's stable and it's low risk. You have easy access to your money. You can liquidate it. You can take it out quickly and use it if you need to, which can also be a con as well. If you have poor money management behavior and you're constantly pulling out your investments and purchasing things instead of actually saving it towards the future and letting it grow with compound interest. So those are the 3 ways that you can invest right now that we're going to talk about. And in the next video, I'm going to talk more into detail about what you can invest in within those stocks, within those bonds, and that sort of thing. So now go and be intentional and continue watching the next video about more details about stocks and bonds.